Hello. If you're already struggling with the cost of living and you have a mortgage, then this is perhaps the last thing you want to hear tonight. The Bank of England today raised the base rate of interest to its highest level in 14 years. This is the figure it started the day at. It's gone up by half a percentage point to 2.25% to try and bring inflation under control. If that wasn't bad enough, the bank also admitted that it thinks the economy is already in recession. Tessa Chapman has been looking today at some of the figures.
Wherever you look, wherever you shop, prices are rising and now millions of mortgages will be going up too.
It's due, I think, next August to be renewed. And we found out the other day it's probably going to double, almost another £1,000. So that's quite scary.
It's the Bank of England's task to tame inflation, and their tool is interest rates. When they're higher, the theory goes, people will borrow and spend less and curb rising prices. The Bank of England has been increasing the base rate of interest gradually this year. Last month there was a bigger rise, 0.5%, and today they did it again, taking the base rate to 2.25%. That's the highest level since the 2008 financial crisis. And economists are warning this won't be the last rise we'll see.
I think the era of cheap borrowing has gone. We see that happening, of course, not just in the UK, but also across the world. But before we get too excited about this, the truth is that in real terms, interest rates are still very low.
But for the estimated 2 million borrowers on variable rates or trackers, payments will go up straight away. An estimated 3 million households and businesses are on fixed rate deals due to expire, like Haroon, who has 2 mortgages. One for his home, one for his dry cleaning business.
Until next February I am fixed, but from next February I find out it will go up around £400, my mortgage.
Every month?
Yeah, just every month.
And how much difference will that make to you?
Lots of difference, you know, around £5,000 a year, you know. Not happy with it, but what we can do, you know. Everything, the cost of living gone up as well.
And while savers will benefit, that won't help people already struggling.
They don't have savings to fall back on, unfortunately. And that's one of the big problems we face, is that households don't have that financial resilience to get by and survive difficult times. So for many clients, actually, they're not going to be looking at their savings, their ISA or their savings account thinking this is good news. It's only going to be bad news because they're seeing their grocery bills go up and their cost of borrowing go up now.
In more gloomy news today, the Bank of England predicted the UK could already be in recession. A reminder, if one was needed, there is no quick fix for the current climate.
Well, let's go to Tessa now, live at Westminster for us. Tessa, good evening to you. It's not a good day, is it, as you were saying there, for those whose mortgage payments are going to be going up. But the Chancellor did confirm today that national insurance increase we've talked about a lot, which happened earlier this year, that's actually going to be reversed.
That's right. This has been really well trailed, so it's not going to come as a huge surprise to anyone. We're talking about the 1.25% rise in national insurance introduced by Rishi Sunak to help social care and to help clear the NHS backlog. That came in April. Today, Kwasi Kwarteng, the new Chancellor, said that that was going to be reversed from November the 6th. The Treasury did say there would still be as much money available to the NHS, but we're not exactly sure yet where that's going to come from. We're expecting to hear more details in the Commons tomorrow in what's being described as a mini budget. We're expecting to hear as well that the planned rise in corporation tax is going to be scrapped. All of this, of course, central to Liz Truss's pitch as leader, and it's going to be open to some scrutiny in the Commons tomorrow.